One of the many benefits of owning a home is the potential tax benefits. You see, when you own a home and when you itemize your taxes, you may be able to deduct the interest you pay from your taxes. It's like Uncle Sam paying for a portion of your mortgage. Now, if you are a first-time home buyer, in addition to the ability to deduct your interest, you may be able to be eligible for a tax credit. Not just for the first year, but for every year you're in the home. You heard me correct. I said tax credit for every year. Welcome to episode 144 of the Martini Mortgage Podcast. My name is Kevin Martini, and I'm a certified mortgage advisor with the Martini Mortgage Group, which is located in Raleigh, North Carolina. However, myself, along with a very talented crew of mortgage professionals, help families in all 100 counties in North Carolina and pretty much in every state in the U.S. too. I'm calling this special episode of the Martini Mortgage Podcast, First Time Homebuyer Tax Credit. There are many benefits to home ownership. In fact, if you are a long-term listener to the Martini Mortgage Podcast, you know that one of my 6 financial benefits to home ownership is the potential tax benefits you may receive. For many, there is a tax deduction option for the interest one pays and also for the state and local taxes. Yes, there are potential tax deductions one can take when they have a mortgage and a home, but did you know there's a 7th financial benefit of home ownership that is reserved for first-time home buyers only? Now, if you are a first-time home buyer in North Carolina, there are actually 7 financial benefits, and the 7th is the tax credit. You heard me correct. I said tax credit. The Martini Mortgage Group offers very unique first-time homebuyer programs. Some of the first-time homebuyer programs we offer require either no down payment or a very low down payment. Did you know that you can be a first-time homebuyer more than once? You heard me correctly. You can be a first-time homebuyer more than once. If you think you are a first-time homebuyer just once, you're incorrect. You can be a first-time homebuyer more than once in a lifetime. You see, the definition of a first-time homebuyer is one that has not owned a home in the last 3 years. So if you've never owned a home previously, obviously you're a first-time homebuyer. If you've owned a home in the past, however, you have not owned one in the last 3 years, you are a first-time homebuyer again. If you are a first-time homebuyer, you may be eligible for a tax credit up to $2,000 a year. Let me properly communicate that this is not a once and done tax credit. It's a tax credit of up to $2,000 a year for every year that you are in the home. Oh, by the way, if you qualify for the tax credit, you still have the ability to deduct the mortgage interest along with other things from your federal tax. Yes, this is one of the rare times that one can say double dipping is allowable. Since some may have questions about what is the difference between tax credit and tax deduction, so let me break it down for you. In the simplest form, a tax deduction reduces how much of your taxable income is subject to taxes. Tax deductions lowers your taxable income. So, for example, if you have a $1,000 deduction and you are in a 22% tax bracket, you save $220. Now, a tax credit directly reduces the amount of tax you owe, dollar for dollar. So a $2,000 tax credit lowers your tax by $2,000. Let me say that again. A tax credit directly reduces the amount of taxes you owe dollar for dollar. So there is a material difference between a tax credit and a tax deduction. So have you heard of the MCC? MCC stands for Mortgage Credit Certificate, and it's offered by the Martini Mortgage Group in conjunction with the North Carolina Housing and Finance Agency. You know who I am, but who the heck is the NCHFA? The North Carolina Housing and Finance Agency is a self-supporting public agency that finances affordable housing opportunities in North Carolina. The Mortgage Credit Certificate offers a tax credit. Again, a tax credit is materially different than a tax deduction. Again, in short, the difference between a deduction and a credit is a credit directly decreases the amount of tax you owe, while a deduction lowers your overall tax amount. It is my opinion a tax credit is materially better than a tax deduction. However, do not fret. If you're eligible for a tax credit, you will also be eligible to take a deduction off of your federal taxes if you itemize. Please know, I am a certified mortgage advisor. I am a mortgage strategist. I am not a CPA or a tax accountant. Always seek advice on taxes from your tax professional that you use. Now, the MCC that the Martini Mortgage Group offers with NCHFA is a tax credit, and all deductible opportunities remain available. If you qualify, perhaps better said, would be this. Eligible buyers receive a tax credit of 30% of the mortgage interest paid annually on existing home. If you qualify, and many of the families I work with at the Martini Mortgage Group do, one could save up to $2,000 a year on federal tax liability. I want to highlight that this is not a once and done opportunity. The ability to save up to $2,000 per year on your federal tax liability can be rinsed and repeat every year for as long as you are in that home and that home is your primary residence. I know what you're asking. Am I eligible, Kevin Martini? If you are a first-time home buyer, and we said it earlier, a first-time home buyer is one who is not on a principal residence in the last 3 years. If you are a military veteran or are purchasing a home in a targeted area in North Carolina, you may be eligible. You must occupy the home within 60 days of closing, and your income in your home sale price may not exceed certain limits. You must be a permanent legal resident of the U.S. to be eligible for the Mortgage Credit Certificate. Let me give an example and how it works. Please understand, I'm sharing this as an example and for illustration only. On a $148,000 mortgage with an interest rate of 4.5%, you may pay $6,660 in interest in the first year of your home loan. The Mortgage Credit Certificate offered by the Martini Mortgage Group in conjunction with NCHFA would allow you to take a federal tax credit up to $1,998. How did I come up with that math? Great question. I took the interest paid during the year. In this example, it was $6,660, and I multiplied it by 30%. Please note that you can still claim a mortgage interest deduction for the remaining 70% of the mortgage interest paid if you itemize your taxes. Now, here is the best part. You can get the benefit when you file your taxes, or you can get it every week in your paycheck. That is correct. You can get the tax benefit in your paycheck every week. You see, a couple of months from when you close, you will literally get a certificate in the mail. Now, this certificate is suitable for framing, but if you elect not to frame it and you take it to your human resources department and adjust your withholdings to compensate for the tax credit, yes, the tax credit is immediate. Well, immediate after you receive it in the mail post-closing. Let me say it another way. If you are buying your first home, you could save up to $2,000 annually. Now, the Martini Mortgage Group is located in Raleigh, North Carolina. Raleigh is located in Wake County. A family cannot purchase a home greater than $345,000, and a family of two cannot have a combined income greater than $95,000, or for a family of 3 plus cannot have a combined family income greater than $99,000 to be eligible. There are 100 counties in North Carolina, and every county has a different limit. If you have questions about the county you live in, just give me a jingle, 919-238-4934. If you have questions about the mortgage credit certificate, just give me a jingle, 919-238-4934. In closing, is buying a home right for you and your family? I do not know. However, I do know that you owe it to yourself and your family to explore your options. Thank you for tuning in to the Martini Mortgage Podcast. Please share this episode with someone you think may benefit from the mortgage credit certificate. And always know, if you want trusted advice from someone that has a caring heart, I am here. My name is Kevin Martini, and I am a certified mortgage advisor, and you can reach me by dialing 919-238-4934. Looking forward to connect. Stay safe out there, and wishing you peace and blessings. Now it is time for the disclaimer. This material has been prepared for marketing purposes only. This is not a loan commitment or guarantee of any kind. Loan approval and rate are dependent upon the borrower's credit, collateral, financial history, and program availability at the time of origination. Rates and terms are subject to change without notice. The Martini Mortgage Group at PCL Financial is a division of Celebrity Home Loans, NMLS 227765, with a branch address of 507 North Blunt Street, Raleigh, North Carolina, 27604. You can contact Certified Mortgage Advisor and Producing Branch Manager Kevin Martini, NMLS 143962, by calling the branch, and that number is 919-238-4934. For a full list and more licensing information, please visit www.nmlsconsumeraccess.org or by visiting www.martinimortgagegroup.com. Equal housing lender.